Look at the actual statistics. Something doesn't add up. By exclusively watching the numbers that the Fed has been eyeing, it would seem that the economy and the general consensus is absolutely fantastic. Yet, central banks around the world are already beginning a new QE cycle. This is so absurd and unprecedented. Never have we seen a global coordinated effort by central banks to backstop a global economy that we are being told is still growing at a moderate pace. Something really stinks. You came here for the truth, so let me unveil that for you. Today we are going to talk about the global coordinated push to prevent collapse. It is important to understand what central banks are doing, also important to note what they are saying. Oftentimes they are two very different things. If you look at the Federal Reserve and the information that they are always checking up on and reporting on, they're looking at their inflation numbers, they're looking at unemployment, they are looking at the basics that I provide you here on the channel and show you why this isn't actually anywhere near reality. If you look at the unemployment rate, I've covered that at length. Of course, we know the deal with that. If you look at inflation numbers, this is obviously a metric that, depending on what you include, is going to have a very different way of interpreting the data and actually giving you a percentage number. People are feeling inflation differently depending on where they live, and of course, even the Federal Reserve cannot agree to an actual inflation statistic. I'm going to show you that today. I've got a lot to cover. Let's begin right away. The Fed is about to cut rates to protect the economy, even though most signs are strong. Of course, this is going to get into all the jobs numbers. It's going to talk about what's happening with the S&P 500, how it is hitting new highs all the time. And so they want to have this insurance rate cut. Something really stinks. Think about this for a second. You want an insurance rate cut to make sure that anything going on around the world isn't going to affect you. As far as I'm concerned, that would have absolutely no way of preventing or backstopping any potential concerns, and it's just really silly to tell me that this is the reason. There's got to be something else going on, and of course we know the truth. We know exactly what's going on. We are always paying attention to that, and that's why I am really thankful that you are here listening to this, because we know what's really going on. The return of easing. You could see the share of central banks either hiking, on hold, or cutting. Right now, in this particular chart from Goldman Sachs, I don't know exactly where this is from, but this is showing us that there are 0 central banks hiking at the moment. I'll show you one that is hiking, but if you look at it on the whole, we are basically seeing that everybody is either cutting or in a wait and see attitude. Okay, so that's where we are presented right now with this information out of Goldman Sachs. But look at this here. Norway hikes interest rates, maintains plan for further increase. This was back in June. I just wanted to show you that. I thought it was interesting that this was not included in that, so it must have been before that, but perhaps they had this information wrong. I don't know, but I definitely wanted to present that to you. Just look around the world and you will see that central banks are cutting in general. Okay, so that's what's happening. If you look at pretty much all over the place, they're either cutting or they are saying we may cut if necessary, and so on. There are all different ways to create stimulus here, and China is doing every single one of them. You're looking at the easier China policy, China's 7-day repo rate. This has been declining for a little while, actually. It was sort of around this range between 2017, 2018, and then it had been declining ever since. They need to do this, of course, because they need all of these institutions to lend out more money, and you can actually see, I believe I just read within the last few days that one of the banks in China was about to collapse. They were going to try and step in. All of the central banks have to do this right now because they need their commercial banks to lend out the money. They are really trying very hard in order to get the money moving. That's what's going on today. It's going on in China, it's going on in the US, in Europe, and everywhere around the world. US inflation nears 2%. Now that depends on who you ask. If you look at the Dallas Fed trimmed mean PCE inflation rate, you could see right now it's at 2%. Core PCE inflation, which is the one that you typically hear of in the news, you hear Jerome Powell talking about it, it is sitting at approximately 1.6%. So even the Federal Reserve themselves cannot agree to a particular inflation rate. Okay, so if we look at the Dallas Fed, they're saying they're right on target. They are trying to actually hit 2%. They have hit that 2%. If you look at what's happening with the core PCE, it's showing that they haven't hit their target yet, and therefore they need to actually create more stimulus. So they can always change the method for which they calculate this PCE inflation, or just use another one entirely that will show us that the inflation rate is always below their target, and therefore they always need to create more stimulus to reduce interest rates, to print money, whatever they need to do. You could see that there had been a divergence here right around 2014, and it becomes very apparent right through 2015, where there's a big spread in between those. But of course, it's not real regardless. But I just like the fact that even their own institution, depending on where you look, is actually not seeing eye to eye. And that, of course, is a good thing, but ultimately they seem to have the same policies all the time, not actually responding to the needs of the people, robbing them every single day. Truly unfortunate. Passive equity funds assets will surpass active by 2022. Look, in the next few years, there's going to be a big change, and that is the fact that these passive funds that have been growing very rapidly since the financial crisis up until the present, well, then it's going to actually surpass the actively traded funds. And I think this is important to note. Those in the financial industry are going to be hurt by this. In the next financial crisis, I believe we're going to see a wave of firings. However, they will not be rehired. That is troublesome, because if you look any downtown core, you find that the biggest towers are always these financial companies. Well, hopefully the robots will be able to sit at those desks, because I don't think they're going to need any more humans. At least they'll have a reduced workforce. That's what I'm trying to get at. Bonds on pace for record year of inflows. Take a look at this. You can see that hundreds and hundreds of billions of dollars worth are moving in. And of course, this data provided by the EPFR. I think it's important to look at this to try and see where the money is going to and from. Most people are completely oblivious to it. They simply buy quote unquote good companies, whatever that means, and then they believe that they'll just hold for all eternity. They have no exit strategy whatsoever, and they just believe that, well, I don't need to worry because I'll always have the dividends for this particular company or that particular company. Well, unfortunately, during a recession, many companies stop giving dividends. So you can't actually hope and pray that, number one, this stock that you bought or asset, whatever it is going to go up and up forever. But when you challenge the person on that, they finally say, well, in the event that it goes down, I'll still make dividends on it. No worries. That's really not the case. You can't rely on that. Although I really like dividends, that's the only reason why I would ever buy paper, but you have to look into it a little deeper and actually see the track record throughout these crisis time periods and what happens afterwards. Number of listed domestic stocks. I just wanted to include this very quickly here. I wanted to show you the fact that the United States, the amount has declined significantly over the years. And then you see China, that has been increasing over the last few, since the financial crisis at least. The world itself has pretty much been flat since the financial crisis. And that data there is just something I thought was important to share with you, because I've been seeing all these new companies popping up all over the place. You got these unicorn companies and others. And how many will actually remain? How many will be there 20 years down the road, 50 years down the road? We need to be very diligent with stock analysis, and a lot of people simply don't care. They just buy whatever they see on Seeking Alpha or whatever Jim Cramer tells them to, but that really isn't wise. Sluggish emerging market growth. This right here just showing you that basically all around the emerging markets, no matter where you look around the world, this has been in the negative. That really isn't a good thing, okay? So we're seeing that this has been a global phenomena that has been going on. We have seen this stagnation, we've seen the slowing that is happening, and it isn't just one country, it's not just one thing. You can't point to just, well, it's because of that. I hear that all the time, but of course you cannot really squeeze it down and condense it into a sentence or one fact, and you're trying to really just hold everything to that. Never works. I just want to end the video there. If you found it informative, hit that thumbs up button. By hitting the thumbs up button, you're supporting this channel, so I do appreciate that very much. If you want the financial education you were not taught in school, these two books have everything you need, all the details, A to Z. You can get it at the link in the description. If you want the audiobook, that's available at themoneygps.com. If you have not seen this very important data I have put together, then you need to watch it. Click on the video. I will see you there.